Yo, what is up guys, and welcome to another video on this YouTube channel. Okay, so today we are quickly going to have a look at balancing ledger accounts, because a lot of you seem to not grasp the concept of balancing ledger accounts. So we are going to try and fix that, and I'm going to give you some tips and some steps to help you ensure that you balance the accounts correctly and that you can be awarded the full marks for that section. Alright, so let's get right into it. So if we have a look here, there are of course some rules to follow, which I like to tell my kids in class that it is the 5 steps to success, alright, when balancing a ledger account. Okay, so step number 1 is ensure that all your transactions are entered and done so correctly. Okay, so this is in your CRJ and CPJ. So of course, before we do any ledger accounts, we have to do the journals first. That's part of the accounting cycle. Okay, so journals first, then ledger accounts. All right. Step 2, ensure that you haven't omitted any balances or of course totals. Okay, if we work in the nominal section, if there are any. Alright, so here is our balance here already for us in our bank account. We're going to work with the bank account now. Alright, we need to step 3 then go, well, from step 2 we go to step 3, which is, it tells us to transfer the totals from the journal into the respective ledger account. Okay, so in this case we're going to use the bank account. Alright, now in the CRJ, we would of course have our bank column there, and when we add all those transactions up at the end of the month, we get a total. Okay, now instead of entering everything individually into the bank ledger account, we can group it using that total amount in the CRJ, and we give it the details total receipts. Okay, so this is how many receipts we have issued, of course. Alright, because obviously a customer gets a receipt and so do we. Alright, so what we do is, of course, it comes from the CRJ, and because it's income, it increases our bank account, so it appears on the debit side. Alright, now the same thing for the CPJ. Alright, instead of entering all the transactions individually into into the bank ledger account, we can group it again and give it one heading called total payments. Alright, now once we have finished transferring from the journals into our ledger accounts, we can then go to step 4. Now this is where we begin to balance the account. Alright, so step 1 to 3 is your usual transferring from the CRJ and CPJ into the ledger accounts. Step 4 is now where we begin to balance the ledger accounts, where we start. Alright, so step 4 tells us we need to compare the two sides. Okay, so meaning we need to compare the debit side and the credit side. Okay, so we compare them. Alright, what we do is we add the debit side up. Alright, so let's take it here. We look at this one. So we've got 1000 plus the 500, and that gives us 1500. So what we do is just very small at the top, we write that total over there in pencil. Okay, you can do it in pencil. Alright, just so that we can remember it, because we also have to now add up the credit side. Alright, so 1250 plus 0 gives us 1250, which is over there. Okay, now we can then, so it tells us here in step 4, we add the debit side up, which we've done, and add the credit side up, which we've done. Okay, now we see which side has the greater amount and use that as our total for both sides of the account. And why? Because the debit side has to equal the credit side. Alright, so if we take a look here, we have 1500 for the debit side and 1250 for the credit side. So it's quite obvious to us that the higher amount is the 1500, and we are going to use that for both sides of the account as our total. Okay, 1500 for both sides. Okay, Now if we go here and we take a look, it says, let's take a look again at the debit side. 1000 plus 500 gives us 1500. Yes, 1250 plus nothing doesn't give us 1500. Okay, so there's an amount that's missing. Okay, so we need to go then over to step 5 to find the outstanding amount in order to ensure that we balance our account. Okay, so this would be known as our balance we would carry down for the next month. Okay, 1500 subtract 1250 is of course 250 rand. Okay, so this was a transaction. This was what a transaction that we have entered. Okay, now what do we know about transactions? That for every debit entry there has to be a credit entry. Okay, so in this case we've made a credit entry. Now we need to do a debit entry. Now this takes place within the ledger account when we balance. Okay, so on the debit side for the next month we would have a balance that would then bring down, or it was brought down, of 250 rand. Okay, now why is it important to balance the account? And now this, it might not make sense now, but let me explain to you. Okay, if I gave you a monthly allowance of 2000 rand, for example, right, and let's say, so you had, I'm going to write it here at the bottom, so 2000 rand allowance. Okay, and I'm going to draw a mini bank account for us. So I've given you 2000, so this is our bank account. So now I've given you 2000 rand on the 1st of, let's say it was on Feb the 1st. Okay, on February the 1st I gave you 2000 rand. Fantastic. Right, now during the month you went and you bought from Cotton On, you went and you bought from I don't know, Pick and Pay, Spar, wherever you go. Okay, Edgar's, right? And at the end of the month, your total payments that you made, so Feb 28, your total payments was 1500. Okay, which means that you spent 1500 rand of that 2000. Okay, now how much money do you have left? Okay, so you had 2000, you spent, so this was what you had, what you got, and you spent, so what you spent. Now we did not spend that whole 2000 rand. We spent only 1500 of it, which means that we have 500 rand left. Okay, now you decide okay, so now let's say it is 10 o'clock, curfew has kicked in, you cannot buy anything at all, you don't even want to buy online, you want to go to the shops and get it, but now it's the 28th of Feb. Okay, now on the 1st of March when you wake up, that 500 rand is still in your account. It does not go poof, the bank doesn't take it. Okay, so it's the same principle in a business. What happens is with this balance over here, this balance that we carry down, this tells us how much we have left. Okay, in this case it's in our bank account. All right, so how much money do we have left? Okay, and for the 1st of March, obviously in this case we would balance our account, so it was 2000, that was the bigger amount, 2000, that was the bigger amount. We'd have a balance that we would carry down of 500 rand, and a balance on the 1st of March of 500 rand. Okay, this is what we brought down for the next month. Okay, because it doesn't go missing, that money always will stay in our account until such time as we spend it or bank charges eat at it, etc. Okay, it's the same principle for a business. That 250 rand doesn't just go poof at the end of the month. It still sticks around in the bank account until such time as it's used. Okay, so for the 1st of March, the very first thing that we walk into March with is the 250 rand in our bank account before any other transactions take place. Alright, And this doesn't just apply to bank, it could apply to our trading stock as well. So we might have started off with, let me just extend this to make it bigger, 3,000 rands worth of trading stock, and we sold 1,500 rands worth of trading stock. Okay, so our total, the bigger amount is of course the 3,000 rand, and it was a difference of 1,500, which would be our balance that we would carry down. And on the first of the next month, it would be our balance that we brought down of 1,500 rand, which means that we have 1,500 rands worth of stock still left, all right, from the previous month that we can still sell, if that makes sense to you guys. All right, so we still we started off with 3,000 rand in February. We sold 1,500 rands worth of stock throughout February, and on the 1st of March we still had stock left in our shop, valued at 1,500 rand, which we can still sell. It doesn't mean that we have to take that stock and throw it away. Okay, so because we didn't sell it in the month, well, too bad, dustbin, you know what I'm saying. You're not going to do that, because you are then going to have your business run into what we call a liquidation phase. All right, I hope that helped you with balancing, and made it a bit easier. I will post all of this. I will submit a link as well, so that you can have access to notes and stuff, these specific notes, with not all this writing on, but the final bank account, etc., which will make it, I hope it made it easier for you to understand how to balance the account, and always remember the 5 steps to success in balancing an account. So let me just get back. I hope that you guys have an amazing day further. Stay lit, stay real, stay humble, stay safe, and I'll see you guys in the next video.